and welcome to Power Breakfast on ICICI Direct. We are in an exclusive conversation with Sanjeev Bikchandani, founder and vice chairman of InfoEdge. InfoEdge is an online classified company. Its flagship classified, Naukri, is most well known for its recruitment platform and contributes 70% to its top line. InfoEdge also has other classifieds like Naukri, 99 Acres, Jeevansaathi, etc. It has also invests a lot of its money into internet companies, Zomato being one of them, and Policy Bazaar, no paper forms, to name a few others. It's made over 1,000% return on its Zomato investment. Sanjeev is a billionaire, founder, investor in Zomato and Policy Bazaar, and also known to be one of the most successful entrepreneurs our country has seen. Thank you, Sanjeev, for joining us on the show today. Sanjeev, I want to talk about InfoEdge, get a sense of what business looks like. I know you are in a blackout period, but nevertheless, let's talk about the qualitative aspects of the business. From what we are hearing and the reports that are doing the rounds, hiring, I believe, has picked up across industries in India. I guess it's more like revenge hiring that the country is witnessing post-COVID. Growth prospects for Naukri are likely to grow. What speed are we looking at? What sort of revenue outlook do you have in mind? What's business really like on the ground?
See, we are taking it quarter by quarter. Definitely, there was a very good pickup immediately after the lockdown lifted, the first lockdown. And then we were impacted by the second lockdown. But the second lockdown wasn't as bad for business, although it was much worse for people and people's health and their lives. The second lockdown wasn't as bad for business because as the first one, simply because people were now accustomed to running business through a lockdown. The first one took everyone by surprise. In the first lockdown, we saw a minus 44% YOY growth on Naukri billing in April, June 2020. While business was impacted in the first quarter of this year, with April and May being very badly impacted. I think it wasn't as bad as the prior year, and the bounce back has been tremendous since then. We saw the bounce back first in IT, and IT is a big part of Naukri revenue. And then we saw an immediate bounce back in IT skills required for non-IT companies because the world is moving towards digitization. And then we saw comeback in other sectors, not as sharp as in IT, but yes, there are still some sectors that are just soft, such as travel hospitality. That's to be expected. But even there, what we are expecting is that if there isn't a debilitating third wave, right, in this country, and there isn't the kind of lockdown that we saw, twice earlier, we should be all right. The economy should be all right. Of course, there is this trend towards formalization, and we benefit from that because a lot of our clients are in the formal corporate sector. A bulk of our revenue comes from there. How SMEs will do and how SMEs are doing remains to be seen. But overall, I would say from a macro perspective, it looks pretty decent right now.
Sanjeev, so what does that really mean for Naukri? Are you getting more clients on board, or are you increasing your wallet share of existing clients because of the pickup across industries in terms of new recruitments?
So it's a bit of both. See, our growth happens due to two or three factors. One is we get more clients. Mm-hmm. Two is we get clients to upgrade. If they took solution X last year, they will take solution X plus Y this year.
So it's a lot of cross-selling that's happening as well.
Upgrades, I'd call it. Upgrades, this product, that product, this add on this product. Or you're hiring more, take more passwords to our database.
Right.
Why don't you take a branding solution this year, in addition, right? And the third is raising of prices, right? Now, in general, we try and raise prices only marginally each year because we don't want to create a low price umbrella behind, so somebody comes in from underneath with a lower price and then he takes enough jobs and clients away. If you take jobs away, you take traffic away. That's the end of the wedge. What we do like to do is to give less discounts. Somebody's got X% discount on a negotiated basis last year. Can we reduce the discount? So effectively, price has gone up, although rate card price hasn't gone up by much, right? So price increases, new clients and upgrades. But typically, I would say upgrades and reduction of discounts contribute the maximum to our growth. New clients, we are adding about 10 or 15% new clients every year, but on a net basis, some drop out. But the fact is, when new clients come, they come in at the bottom of the ladder or at the lower end of the ladder because they're trying us out for the first time. Right? And if they're already large companies, they're probably using us earlier anyway because we are substantially penetrated. And therefore, we don't get very large new clients, but they move up the ladder over the years. So new clients doesn't give us too much growth. Upgrades and reduced discounts do.
So, of course, you clearly work in a subscription model, which is probably the best way to run your business. What is the sort of wallet share that you get per client? If you can give it to me in percentage, that would be great as well. Just so that I understand what is the return that you're making on these clients, and hence the pressure on acquisition or client acquisition is much lesser.
So it's like this. Let's say Naukri has 90,000 clients right, in a year. 90,000 organizations used us to hire in that year. Some as low as one-offs and some always, right? Now, roughly the top 10%, that's about 9,000 clients, will give us 60% of our billing.
Oh, wow. Okay.
If I go to 20%, it becomes 85% of the revenue. Okay. The top 20%. So the top 18,000 clients will give us 85% of billing. So really, it's about, there's a concentration of revenue at the top, where each client is large in terms of revenue and therefore gives us substantial money. And those are the profitable accounts which we service through a dedicated account team, personal visits, training, and so on and so forth. Now, the others are a long tail of small clients. They are very important to us because A, they give us enough revenue, but typically we can't service them with a sales force.
Right.
Because, maybe 1 or 2 visits a year, right? It's largely through remote, telephone and video and, WebEx and stuff, right? And that's how we divide it. So our sales team is divided into 3 components. There is a key accounts team, which services the absolute top end clients. There is a named accounts team, which is the next level. And then there's a telesales team. Now, having said that, everything has changed in COVID because even key accounts are being serviced over video.
Virtually, yeah.
Of course, now it's coming back. But for a year or so, that's what was happening. And the clients also preferred that because they didn't want to meet.
Yeah.
Okay.
I'll talk about that, of course, in a minute in terms of the cost. But Sanjeev, so break it down for me, right? You indicated that a large chunk of your business is coming in from the top 10% of your clients.
Large chunk of our revenue. See, there are 2 aspects. One is the job listings.
Yeah.
So we need job listings from the long tail as well. Right? Because that's what gets traffic.
Absolutely, yeah.
So you may be paying us not a lot of money, but if you're giving us a lot of job listings, because you're taking the lowest end job listing, but you're supplying a long tail of jobs to us.
Yeah.
Which is what a lot of job seekers value. And which is why they come to the site. If you only had jobs from the 1,000 best companies only, right, it wouldn't be half as attractive for traffic.
You're right, yeah.
Because it's different strokes for different folks. So what our promise is, you got the right job for everyone.
Yeah.
And the right job for one person A may be the beauty parlor down the road. The right job for person B may be this, multinational corporation which is looking for XYZ person.
Right. So you are servicing the masses, right? And that exactly.
As well. Masses, classes, everybody.
That's what makes Naukri. Let's talk about the other verticals before I talk about competitive intensity and all your cost, employee cost to be specific. We're also seeing a pickup in weddings, real estate. A lot of it is almost as if because of the pent-up demand that we've seen in real estate after a very long period of time, seeing a recovery. Builders need to get the inventory off. So I'm assuming both these other classifieds are also seeing quite a bit of traction. I know they don't contribute very substantially to the top line, but how are those 2 businesses doing and what is the outlook for Jeevansaathi?
Well, actually 99 acres is a reasonable size business now. It is not as large as Naukri.
Yeah.
But it's a decent mid-sized business, upwards of a couple of 100 crores top line in a year.
And percentage, so that would be quantity. What about the percentage to revenue in terms of contribution for Jeevansaathi and 99 acres both?
So Naukri is still a big chunk of our revenue, 70%, right? And if Naukri was faster this year, it'll account for a higher percentage. But look, 99 acres is also growing well.
Jeevansaathi are playing catch up, huh?
Well, Jeevansaathi is a steady, growth business, steady, modest growth business. It's not a rocket ship in terms of growth.
What 99
But you know something, Jeevansaathi, we say, hey, this is not a great business in boom years.
Yeah.
Everything else is growing much faster. But in slowdown years, Jeevansaathi suddenly starts shining and say, hey, what a great business. It's growing even in a slowdown. Right? So Jeevansaathi has got its own trajectory. And, there, we are number 3. Matrimony is number 1 and Shadi is number 2. And so we're playing catch up. And the challenges for us there are different. I think 99 acres, we're leaders. Although not dominant like Naukri, we're leaders, and that's a different thing.
So the strategy there is to increase market share, I'm guessing, as well, aggressively, right?
In Jeevansaathi?
Yes.
Well, it is. We have our segments and areas of focus. See, typically all these matrimony sites enable arranged marriages to happen. Arranged marriages happen within your religion, within your caste, within your linguistic community, and so on, by and large.
Yeah.
Right? So therefore, India is not one market. India is 3,300 micro markets.
Wow.
Okay. So really, the issue is, are you dominant enough in enough micro markets that from that sub-segment, you are profitable and you can get enough business? And if you are, then A, you have a profitable company, B, you have a defensible position. So the real issue there is not to be number 1 globally, nationally. But are there enough segments in which you're number 1?
So you've got to own the segments that you really play.
Yes, and there's 3,300 segments.
Outlook then there, Sanjeev, I know it's tough to give me numbers, but on the boardroom, what are the conversations? What sort of growth?
How do we, we are losing money in Jeevansaathi. The question is, how do we manage burn while still growing and achieving our goals and targets?
So the target
and more importantly, I think the strategy in Jeevansaathi centers around our innovation, product innovation, business innovation. And how are we doing that? But we do a lot of stuff using smart analytics, to data analytics to make things work better for us.
When can we anticipate or expect that to turn profitable for you, Sanjeev?
We aren't even discussing that internally. So we say achieve your targets. This is a small blip, the kind of losses that Jeevansaathi makes is a small blip in the overall profitability. So it's okay. We can afford to invest.
And what about 99 acres, Sanjeev? How is that looking? What is the sort of growth outlook you have?
Well, we are expecting decent growth here. We're not putting out numbers, but we're expecting decent growth here. We are already seeing some pickup. But like I said, a lot will depend on COVID. And if there's no third wave, I think it should go all right.
It should shoot up. Right. Sanjeev, of course, we talked about growth being robust, right? And you talked about how this is an employee's market in a recent article that I came across. What does it mean for you in terms of employee cost? I'm assuming if you're going to grow the business, employee costs are going to rise up. We're again going back from virtual meetings to meeting in person.
Yeah, I think look.
How are you managing your margins and employee cost?
So see, our costs are going to go up, no two ways about it. And they're going to go up, fairly substantially because it's a very competitive market for talent right now. So although we are in the job portal business, the truth is we also have to scramble to get good people. Okay, it's not easy for us either, which is a good thing for Naukri, actually. It means that our product is relevant, right? Yeah. But having said that, look, we are right now able to afford it because of the decent growth we are getting in top line in in both Naukri and 99 acres.
Right. So you can afford it now, but what does that mean for margins? Will you maintain margins from what we've seen in the previous quarter? Will we see a blip going ahead?
Well, the way I see it is, I don't have the numbers with me, but the way I see it is, we'll be okay on margins. That should not be simply because we got to understand that we are a high operating leverage business.
Yeah.
Which basically means we have next to no variable cost. It doesn't cost any money to put one extra job listing on Naukri.
Right, yeah.
The only variable cost is sales commission, right? Which basically means that 93% of the incremental sale goes to the bottom line.
Yeah.
So the way our costs are structured, there's an overhead. The overhead is rent, salaries, marketing, technology and servers, right? And a few others, right? Now the overhead, say there's a cost creep. The cost creep let's say, is 12%, 15% a year.
Right.
At 12 or 15% growth in a year, therefore, we maintain margins. Above that, the incremental revenue goes mostly to bottom line, and that's when the margins go up.
Oh, yeah.
Okay. Now, in a boom year for talent, this 12, 13, 14% may go up to 17, 18%.
Yeah, 17.
Because cost of talent went up.
Yeah.
Right. At that time, if you're growing, but your growth shoots up to say 25%, you still increase your margin. If your growth is at 17, 18%, you maintain your margins.
Yeah.
So I think right now it looks like we'll be okay on margins, even though our costs are going up.
So we could expect growth of 20 to 25%.
We don't know yet. I'm not giving numbers. We don't know yet, but
I really understand it is that time of the year.
But it looks like that we should, in spite of salary inflation, we should be able to maintain our margins. It's what I'm expecting. We don't have the numbers in yet.
Right. Sanjeev, this business...
But you have to understand when you look at our quarterly numbers, salaries go up in April. Right? This year, they went up a little later because of COVID, because April was locked down and things.
Yeah.
And therefore, the wage increase is a step function. There's a sudden increase in the beginning of the year.
And then it sort of eases by.
And then it kind of flatlines.
Yeah.
Kind of flatlines because the increments already happened. But the revenue does not go up only in quarter one.
It continues to grow across all.
So therefore, there could be margin pressure in quarter one, but for the year, on the average, we should be okay.
Balances out.
Yeah.
Right. Sanjeev, this business is all about marketing, right? It's about increasing market share. And you've been spending quite aggressively on 99 acres, Jeevansaathi. Naukri, of course, takes up a lot as well, given that it is such a big revenue contributor. What is that space looking like? Still aggressively going big on marketing?
Well, I think in jobs, Naukri is dominant, right? And
you have to fight for your share too much there.
No, see, we advertise a bit. That's more for market expansion and less for competition. But in 99 acres, yes, there is competition, and yes, there is competitive advertising, and yes, we are and will advertise. But obviously, you not advertise when the market is totally down and real estate not selling. If real estate not selling, no amount of advertising will make people buy.
It's going to help, yeah.
So obviously, the market has to be recovering for us to invest in marketing, which is now seems to be doing, right? Jeevansaathi, of course, we are in a competitive situation where we have to market, in which we do. Okay, but really, this you began this section or this question with a comment that this is a game of marketing. No, this is a game of product, of innovation, of technology, of a better UI, of great user experience, and then you market.
So it's all about innovation, really.
So the two go hand in hand.
Yeah. One without the other would not work.
Yes. So, but you do the product innovation, engineering, UI improvements first, and then you market.
Right. Sanjeev, I want to talk about your earnings a little bit, and then, of course, I'll go on to talk about the investor companies because that has also been outstanding to say the least. If we look at the stock performance, it's given you 35% CAGR year on year over a last 10-year period. The stock itself has doubled down in the last 1 year. But if you look at the performance in terms of financials of the company, it's been rather inconsistent, which may or may not be reflected in the way the stock price has been moving. So that clearly is a different story. Is that the nature of the business? If yes,
no, I tell you. I don't.
How do you rationalize that when you go on to?
I don't rationalize it. Okay, I don't try and understand or predict the stock market.
So right? That aside, let's.
Okay, so the stock market has its own logic,
which is a good logic right now.
Well, you see, the point
working out in terms of the stock performance and the return for investors.
Yeah, so let me explain to you. See, my views. The Fed has infused $4 trillion into the US economy. Now, this kind of infusion of liquidity is unprecedented. Never happened before in the world. Ever. History. Never happened.
I mean, COVID's never happened, right? I think
yes. Right? Now, this liquidity has found its way everywhere. It's found its way everywhere. Public markets, private markets, every geography.
Yeah.
Right? And which is why you are seeing asset price inflation everywhere, including where fundamentals will take time to catch up.
Okay.
Right? And I think we may like to believe we are smart, But the truth is, we are also in the right place at the right time.
That's all it is. Yeah, you're right.
I'm not saying that's all it is.
But it's a huge function of what it is, right?
It's a significant contributor.
Yeah.
Right. But I would say we've done very well to come through COVID and the crisis of the lockdown and managing our costs and still getting, and more importantly, helping our employees cope with COVID. We ran, in the second wave, we ran a huge relief center.
Yeah.
For the company employees, then their families, then their friends, and whoever asked for it. We were doing all we could. Right. And we lost 4 people. That's a tragedy.
Yeah.
We lost many more relatives and family members of our employees, and that's a bigger tragedy. But overall, we could have done a lot worse had we not taken adequate action early on. Right? We were moving concentrators, oxygen cylinders, medicines, city to city, house to house, teleconsultant doctors, trying to get people to hospital beds, all sorts of things. And there was a 60% team in the company working on it. Right? Nationally, we got offices in 41 locations, and people had gone home to work. So a village near Patna, place where you don't have offices, small helping, right? Running a 24/7 call center for this, right? But we came out of it, right? And we managed fairly well. But look, if you look at fundamentals over the last 10 years, I think Naukri has shown steady growth.
Yeah.
But Naukri is impacted substantially by the overall economy. So when the economy grows well, Naukri does very well. Economy does badly, Naukri does badly. Because if companies are not hiring, they will use Naukri less.
You're right, yeah.
Okay. Now, as the economy recovers, so we more or less mirror the Indian economy, some multiple of it. Or some multiple GDP growth, Naukri grows by. Jeevansaathi is a different thing. 99 acres, look, we are indexed to real estate market. And the real estate market has been, topsy-turvy over the last 10, 15 years. Ever since the global financial crisis. Some years good, some years bad, many years bad. Right? But hopefully, as economy comes back to growth, I think we'll get our fundamental growth back, and it's already happening.
Sanjeev, how are you sort of hedging that? Are you looking at different geographies in that case? Maybe expansion to the other Asian countries? Is that something you've talked about, considering?
We have a small operation in the Middle East.
Year, right?
No, we have a small operation in the Middle East.
Okay, very obviously, yeah.
Okay, but other than that, we have no international plans.
But any plans to expand to markets like Nepal, Bangladesh, like you said, Middle East?
We keep looking, but these are small markets. You see, the size of Bangladesh market is like 1 or 2 states of India.
Substantial in terms of contribution.
So we've looked at Pakistan, we've looked at Bangladesh, we've looked at Afghanistan, we looked at Nepal.
Oh, exciting.
Afghanistan, not now, right? It's 10 years ago. It's 10 years ago.
But given the kind of human resources or the kind of supply that we do to the Middle East, so maybe Oman, Saudi, Dubai, UAE, are those are very obvious sort of expansion strategies,
yeah,
right?
So we are there. But look, the Indian market dwarfs all these markets. So a 5% extra growth in India, on the large base that we already have in India, would be more than what all these markets put together and give us.
Correct. You're right. So I guess, let's where it matters the most, the ROI. Right. Sanjeev, I want to talk to you about while of course, we've talked about all your classified companies, you've been instrumental in what is happening with the investees companies, right? So you've been very ahead of the curve, invested big bucks. First, I believe, one of the first few investors who bet big on Zomato, obviously reaping the benefits. It's not just Zomato, the stock, what Policy Bazaar, no paper forms. Give me a sense of what that means for your valuation, because it's really sprung out of nowhere and you had the foresight to see this coming, right? Which most of us didn't.
So we did. I didn't see it coming. Not to this extent.
Oh, you didn't, huh?
No. We
what led to the investment in Zomato?
No. We said good people.
So you were betting on people.
Chasing a great idea.
Yeah.
Put in a small sum of money. Our first round was only 4.5 crores.
Oh.
Okay. And see what happens.
And this was largely coming in from just expecting it to work because they were good people.
Chasing a good idea.
Chasing a good idea, okay.
Right. And it's 4.5 crores. And it wasn't that much money, given the size of our balance sheet. And they did good stuff. So then we put in, I think 13.5 crores, 12.5, 13.5 crores, about a year later, further. And they continue to do good stuff.
You continue to put more money in?
And we put in another 13 crores. I think $2-3 million we put in again. Yeah. And they continue to do good stuff, and then we put in $10 million.
Ooh.
So the first 4 rounds we were solo, but
Yeah,
it was step by step.
Yeah.
So go into the small check, observe, work with them.
Yeah.
Support them further with a larger check and a higher valuation. You can keep on doing it. And then till other investors come in.
Yeah.
So first 4 rounds we did solo in Zomato. But at each stage, it was a calculated risk.
So have you completely cashed out of Zomato?
Not at all. We own 15% still.
15% right now.
Roughly, I think it's about that much.
And what are the plans of, you'll hold that up until when? Any sort of conversations there, or you're not talking about it, thinking about it?
When you hold a listed company stock, and you have a board that is vigilant, right? There will always be a conversation.
Absolutely. Right? Even if you don't want to have it, there'll be people coming to talk.
Yeah. So, but my personal thinking, and the board has often overruled me in the past on various issues. My personal thinking is that, look, if it's a great company with a lot of growth left, why on earth do you want to cash out? Just hang on.
Right. Yeah. Keep writing it if you have faith in it.
See, we are not a fund where we have to return somebody else's money within 7 years or 8 years or 10 years.
This is your own internally balance sheet funded.
That's right. This is balance sheet funded, so you can hang on. So we've done a little bit of exit, which is basically we've given the investment back plus the treasury rate of profit, which we normally earn. So the money we took from InfoEdge, we've given it back. And
that money's come back onto your balance sheet.
That's right. And along with what we would have earned had we put it in our regular treasury strategy over the last 10-12 years.
Yeah.
And the balance, so now we are effectively in Zomato at zero cost.
Yeah, it's riding itself.
Yeah, and why on earth should we look at selling?
Wow. Sanjeev, of course, the stock is now also having its own little party on back of hopes and talks of Policy Bazaar. Any plans there? I don't know what you can.
So they filed a DRHP. We are waiting various clearances.
And what will InfoEdge's strategy be on that?
The same as Zomato. I mean, why will you sell? You will sell
if you're concerned.
If you sell, if you really need the cash for something else, and you can't get it from elsewhere.
At this point of time, yeah.
You will sell if you say, hey, this company now is not going to grow fast. It's going to grow slowly.
Yeah.
So you want to take some chips off the table and put them elsewhere.
Yeah.
Right. But otherwise, you will go on for the ride.
Yeah. So any other big bets?
But, even the founders want us to stay because we are a kind of.
It also adds that stamp of credibility, right?
Well, I think they're credible enough now without us. Okay. So early on, perhaps we give them some credibility. But look, they are great entrepreneurs, founders in their own right.
Yeah.
And they have built these companies, not us. We have simply put in the money, some of the money. Okay. And they don't really need us. They can sort of, go ahead. They built the company. But yeah, I mean, we work well together, so they'd like us.
Yeah. So you'll obviously stay on with Policy Bazaar.
Well, in the DRHP, if you look at it, we have not asked for any offer. We're not given any offer for sale. And if you look at, and once it goes public, you're locked in for a while.
Mm-hmm.
Look, but fundamentally, there's growth left in the company. Why do you want to sell?
Exactly. You're right. Why bet on anything else when you've got this going? Sanjeev, you obviously have an eye for unicorns. Anything else that you're looking to pick
When we invested in Zomato and Qualitive, the term unicorn was not invented.
Yeah.
Okay. No, we like to go in early behind good teams doing good
That's
stuff.
because you can identify this, right? I mean, a lot of people
but
ability, risk-taking appetite, the foresight.
No, when we went to Policy Bazaar 2008 and Zomato 2010, the term unicorn not been invented.
It even exists.
There weren't so many people wanting to invest in these deals. Now it's much more competitive. It's much more competitive.
So anything that you're eyeing right now, Sanjeev, anything that you want to take onto your balance sheet that looks good, that looks promising, and that could then further, bump up your valuation at InfoEdge?
Well, look, we are always
keeping an eye
and looking to acquire stuff. And we have done a couple smaller ones. We've done IM Jobs, we've done Zoam, right? We did Ambition Box a few years ago.
No
right?
paper forms,
But no paper forms is a minority investment. That's not an acquisition.
not too
right?
large.
It's an investment. It's not acquisition,
Yeah.
right? And we are below 50% there. So, it's not as if
Yeah, I saw that. Yeah.
majority, okay? But look, we are constantly looking. And as when we find something and it works out, we'd like to do it. But there's nothing to announce right now.
Nothing's on the cards. But otherwise, all good. Business is looking upbeat. Mood is upbeat. Margins, you said you will work around. Anything else that you want to tell our viewers? I know we might not be able to talk too much numbers, but just great insight.
No, I think what I said earlier, which is that barring a debilitating third wave, we think the economy, from where we sit, we see the economy doing fine.
Yeah.
And we see our company doing fine as long as there's no debilitating third wave.
Any new classifieds that the company is talking about launching into?
There is no fifth vertical that we are seriously considering right now.
Okay.
We've got our hands full with 4.
So you just want to consolidate from
And
there.
I will not rule it out. But there's nothing significant being considered right now.
So really the plan is consolidate and solidify your position and across all the verticals you have.
The 4 verticals, yeah. That's right.
Great. Great talking to you, Sanjeev. An absolute pleasure to have you on the show. Thank you very much.
Thank you. Bye-bye. Nice meeting you.